Adam Hewison here, co-founder of MarketClub with your midday market update for Friday. Yes, it's the end of the week, the 22nd of June. Well, it's been quite a week. And make no mistake about it, yesterday, Thursday, was a disaster for the bulls in the equity markets. The fact that we witnessed crude oil crashing below $80 a barrel, gold also crashing. It was difficult to see how stocks would even keep up for the day. But anyway, the reality is, we're going to be closing lower, unless it's a miraculous rally later on the day. We're going to be closing lower for the week in the equity markets, the S&P 500, the Dow, and the NASDAQ. But gold is flat for the year, and crude oil is actually lower for the year. So let's take a look at the charts. We're going to start off with the S&P 500. And one thing I noticed I want to share with you, this is a spot S&P 500 going back, of course, we're going back all the way to 2007. There's the move down in 2008. Of course, the quarter, the low in 2009, and the rallies and so forth. But I want to show you a pattern that's developing, which I think is very, very interesting. And here's the pattern. We made a low here. We also made a low around here, and we also made a low here. Do you notice anything about that? Basically, if you measure these out, it's about every, I would say, probably 14 to 15 months between these low periods. If we do that same pattern again, we go out another 15 months, it means the S&P should make a low at the end of 2012. Maybe it'll be before then, maybe it's 2012, maybe November or something like maybe yes, because of the elections possibly. But the reality is this pattern has been pretty interesting, and it would look as though we're going to see another leg down, particularly after yesterday's big move down. Now, clearing the screen and just going to our weekly charts, because I like to look at the weekly charts. I think they're very, very powerful. So you just go up to MarketClub and click here and go to weekly. And then we want to go to our trade, not our trade triangles, but our candlestick charts. And let's get a bit closer in here. And let's just do a year. And you can see the action is not good. If we put some of our other indicators in here, the Donchian trade channel, and also the parabolic, and you can see we just narrowly missed the parabolic right here. Let me get just a little bit closer in for you on that. You can see, I'll even do there, you can see just missed it this past week. The parabolic was actually, let's see, 1367. I think we got to, I think the high this past week was 1363, so we just missed it by 4 points. But the reality is this action is not good. And the thing to watch today, in my opinion, is if we start making new lows for the day, if we start going below, I think the 1325 level, 1324 level on the downside, that's going to look awfully good, awfully bad, I should say, for the bulls. Also, you see how we're overbought here? And that's another thing to look at in this weekly charts, and that's the key in my mind. The weekly are the keys, and when they start going down like they did here, you were down for 3 weeks in a row, and then you had a little bit of a bounce, and now we're coming back down. So I think for the most part, we're going to challenge the 1300 to 1280 level, possibly down to 1270. But generally speaking, I think we're going to be on the defensive. It may start next week, but it depends on how we close this week. But our trade triangles, if we put those in, you can see our trade triangles are basically negative, and they have been on from 1312 on the S&P 500. We're waiting for the weekly to turn negative. So let's go to our next market. I'm going to go back to our portfolio manager. I'm going to miss the NASDAQ and the Dow because they're pretty much the same pattern. Silver is, we're looking at weekly charts now. One thing I like to do on a Friday is look at the weekly charts. And if you look at the weekly charts in silver, it really does not look good at all. This is a yearly chart, and well, just let's do year to date, and you can see we're actually lower on silver for the year. And that's been a really interesting thing. As you can see quite clearly, we've been negative on silver from $29.98, almost $30, and we're currently trading at $26.74. So we've caught a nice move down here. We've never wavered from a bearish stance. If you remember that long-term bearish stance we talked about. And if we go to our next market, which is gold, you can see, again, we're looking at a weekly chart. And this is not a good close for gold. In fact, the lowest close we've seen in gold here has been 1567. We're currently 1586 or 66, and I think we're going to see some more action. So we could possibly be closing, if we close down here, we'll be closing lower for the week and for this current move, and we're practically flat on the year. So not much going on in gold. No reason to get excited about trying to pick a bottom in any of these markets. You don't want to catch a falling knife. Now, on copper's pretty much the same thing. We're trading below the 30 level with 329. I think that looks really a move down to 310 would not be out of the cards in my mind. Not a good close. And again, I think it's reflective of the slower pace of the recovery, and I also think it's the world demand. It's just not there right now. So next market is going to be crude oil. I'm moving through these pretty quickly, but I want to share this with you. Let me just put this, take this off the screen. Boom. And you can see we have a minus 100. We were looking for this market to go below 80. We thought the 78 to 80 level would be support. In fact, if you look back in crude oil, let's scope this out just a little bit, you'll see that every time it has gotten to this area and it has found support, so you can just go, this is going back to 2010, and just draw a line there. You can see it's basically found support there, and it's made a move from here. So whether that's going to happen again, I think it's too early to tell, but we need to see more base building or some indication that it's made a turn. This past week's market action, in my opinion, was disastrous for this market. So there you have it. The market looks bad. It's going to take a while. I think it's not going to suddenly shoot up unless there's something happening in the Middle East, which is obviously we can't tell that at the present time. So let's go to our next market, and this is the euro against the US dollar, and this looks like it is a market that's ready to fall off a cliff. And as you can see, we had this little couple of week recovery. Why, I don't know. I don't think anybody knows. I think maybe they thought they're going to fix their problem. But the reality is the monthly has been down from 139.69, and we're trading at 125. So again, this is still a negative pattern. I think next week, if we go below 124, we'll see the weekly kick in, and I think we'll see downside pressure. We're looking for this market to go down to the 120 level to the 117 level. So let me just give you that target zone again. So our target zone on the euro versus the dollar is 120 to 117. That's where we think the market's going to go. So let's see what happens, but generally speaking, not a good close. We're lower for the week. These are weekly charts, and this type of pattern doesn't lend itself very well to this formation, this chart formation, I should say. So chances are we're going to come down below here, and then we'll see some downside pressure on the euro against the dollar. So let's clear that up, and let's go to our next market. The next market we're going to be looking at is actually going to be the CRB, Reuters Jefferies CRB index. Now this is going to be very, very interesting. The lowest close we've ever seen on a weekly, not ever seen, but the lowest close we've seen on a weekly has been 268.31. We're currently trading at 268.54, so we're very close to closing at all-time lows. As you can see, we've been oversold for quite some time. And again, this gets back to markets can remain overbought and oversold for extended periods of time. You just have to let them make their mind up. Certainly, the highs that we saw this past week, I think, are very, very important, and that would be right around the 277 level. I think they're going to hold for a while, but I think the market isn't acting very well. You got a minus 90, trend is down, downside pressure. So these, what I really recommend doing is looking at the weeklies and just seeing where these markets have come. You can see this is our target zone, 250, and if that's correct, what that would mean, it would mean that the deflationary scenario we think is going to happen is happening, because moving down to 250 indicates that things are getting cheaper and cheaper. And so that's our target zone, 250, which dovetails with these previous lows right here. And we'll see how that plays out. But generally speaking, things look as though interest rates are going to stay low. which means you're going to see more pressure, I think, in some of these markets. So, hey, I'm Adam Hewison. I want you to have a great weekend. But first, let me just quickly tell you about a program we have here, which I think you'd really enjoy. And that is the program we have on one-on-one personal coaching. If you haven't called us yet, you're missing out on something really, really good. So it's a free call. It's a free consultation. You have nothing to lose. Talk to one of our consultants, and they'll be able to help you. 877-219-1482. Don't forget to call today. Adam Hewison for Market Club. I'll see you Monday. Let's see what happens over the weekend. Lots going on in Europe, and of course, we've got the rest of the trading day to go. Have a great weekend.